Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Tuesday, April the 8th, 2008. The headlines out of Switzerland earlier this morning read, "Dollar rise against yen as investors buy again riskier assets." The dollar advanced against the yen and the euro on Monday as stabilizing financial markets raised optimism that the worst of the financial crisis might be over, encouraging some investors to buy riskier assets. Analysts said the dollar also got some support as traders were reluctant to buy the euro ahead of the European Central Bank policy meeting on Thursday and the G7 nations gathering late this week. The global dollar sentiment has improved, but worries about the overall health of the U.S. economy continue to cast a pall over the market. Data on Friday showed the economy shed jobs again in March for the third straight month. Yesterday, the euro-dollar was down at 157.05. The dollar-yen gained to 102.54 after earlier spiking down to 101.51. The dollar Swissy was up at 101.34, rebounding from 100.57 low. The pound dollar went to 198.84 after posting an intraday low of 198.35. The dollar gains overnight were also supported by reports of Japanese pension funds buying overseas assets as they start their new financial year. Central bankers and finance ministers from the group of 7 nations meet in Washington later this week and are expected to discuss a broad range of proposals aimed at restoring confidence in the battered banking system. These measures would be seen as boosting the dollar, which has been pressured by the aggressive monetary easing by the Federal Reserve. Analysts have confirmed that ahead of the G7 and the ECB meetings, people are not going to get aggressive in terms of buying the euro, and nobody really knows what comments the ECB President Jean-Claude Trichet will deliver for the strength of the euro. The Fed has slashed its benchmark overnight lending rates to 2.25% since mid-September, wiping out the dollar's yield advantage against the euro. The ECB is widely expected to leave its key rate on hold at 4%, while the Bank of England, which also meets on Thursday, is seen cutting rates by 25 basis points to 5%. The dollar came under significant pressure in the early Asian session, although no specific reason could be attributed to the move. The euro-dollar spiked from 157.20 to 157.90, with speculations that the catalyst was a large position from a major bank triggering stops, or perhaps traders pricing in the more hawkish ECB comments on Thursday. Risk appetite continued to increase as efforts by central banks to inject liquidity and stop systematic risk created a growing sense of optimism that the financial markets have stabilized. Shirakawa's parliamentary hearing for his nomination for BOJ governorship lacked any specifics on his views of monetary policy, but he nonetheless stated that the BOJ must review all risk without having any preconceptions. We expect the BOJ to hold rates tomorrow and is unlikely to signal any easing just yet. Recently, politics have overshadowed the economic policy, and the BOJ will have to get comfortable with its new leadership before moving in a particular direction, although the market is roughly pricing in a 14 basis cut over the next 12 months. Today's trading will focus mostly on the Fed's minutes for March 18th, when they cut the rates by 75 basis points. The final vote moved rates to 2.25%, but there was clearly some opposition to easing the rates to that extent. Both Fisher and Plauser voted against the decision, preferring what the accompanying statement called less aggressive action. What exactly was meant by less aggressive action? Could it have meant a 50 basis point or a 25 basis point cut? Or should the Feds have left the rates unchanged? The questions remain, as of yet, unanswered. In addition, the hawkish nature of the statement points to a Fed which might be more aware of inflation risk. Much depends on the upcoming economic data and development in the financial sector, but these mints should give us a good direction of the Fed policy. That concludes our news for today. We hope that it's beneficial to you in your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. And also you'll find a link to our Forex forum, also called Succeed in Forex. We hope you'll be able to join us for our future Forex market news broadcasts. So until then, happy pipping to you until we meet again.